Welcome to today's edition of Daily Market Rundown, where we break down key financial developments shaping the stock market and the global economy. In today's session, we'll talk about Bharti Airtel's record-breaking rally, Cred's valuation cut amid fresh funding talks, India's wholesale inflation cooling off, and how Indian markets bounced back despite global tariff fears. Let's dive in. Bharti Airtel stock soared to a 52-week high of Rs 1,816 after announcing strategic partnership with Blinkit to deliver SIM cards to customers' home in just 10 minutes. This service, available in 16 cities, allows customers to order prepaid and postpaid SIMs or port their numbers with doorstep KYC activation for a fee of ₹49, and this initiative is designed to improve customer convenience and increase user acquisition. Additionally, Airtel is making significant strides in its broadband business. The company now has 35 million fiber home passes, having added 1.9 million in previous quarter alone. It is also expanding its fixed wireless access to more than 2,000 cities. Airtel is enhancing its content offering through the Xstream platform, which now includes 22 plus OTT platforms. These developments are expected to contribute to long-term growth, with broadband and digital services playing a key role in Airtel's future expansion plans. Shifting gears to fintech sector, Cred is in talks to raise between $100 to $200 million, with Singapore's Sovereign Wealth Fund (GIC) likely leading the fund round. However, the company's valuation is set to drop significantly from a peak of $6.4 billion in 2021 to $4 billion, a 40% decline. Despite tough market conditions, Cred remains optimistic about its future, targeting an IPO in 2 years and working to post profitable quarters to attract public investors. For FY25, company expects revenue close to Rs 3,000 crores and hold cash reserves of Rs 1,000 crores. Cred's FY24 income surged by 66% to Rs 2,473 crores, but losses widened to approx Rs 1,600 crores due to ESOP expenses and write-offs related to its acquisition of Happy. To diversify and manage risk, Cred recently launched Cash Plus, a secured lending product offering credit lines against mutual funds at competitive rates, aiming to reduce reliance on its Rs 19,000 crores unsecured loan portfolio. Additionally, Cred processed 144 million UPI transactions worth Rs 55,000 crores in March 2025, ranking 7th in UPI volume. India's wholesale inflation eased to 2.05% in March, down from 2.38% in February, as per the Wholesale Price Index. The moderation was primarily driven by a drop in food and fuel prices. Crude petroleum and natural gas price fell by 2.42%, while food prices dipped by 0.72%, causing overall food index to slide slightly from 189 to 188.8. Additionally, electricity prices decreased by 2.3%. Despite this, the manufactured goods segment showed resilience, with prices rising 0.42% month-on-month, driven by sectors like metals, transports, and machinery. Also, Indian stock markets made a strong comeback, with Nifty 50 index rising 2.4%, fully recovering from the losses triggered by Donald Trump's tariff announcement earlier this month. India became first major equity market to bounce back from the global sell-off, while broader Asian markets are still down 3%. Several factors contributed to this recovery, like India's domestic economy provides some insulation from global shocks, and government's measured response to Trump tariffs impressed investors. The Nifty's current price-to-earnings ratio of 18.5x is below its 5-year average, making valuations more attractive. Despite foreign investors pulling back nearly $16 billion this year, domestic sentiment has turned more positive, with experts pointing to long-term opportunities for India as supply chain shift away from China. So that's a wrap on today's market rundown. From Cred's fundraising at a lower valuation to India's wholesale inflation easing in March and Indian market bouncing back after Trump's tariff shock, there's a plenty of movement in the market. So stay ahead for more insights and updates as we continue to track the dynamic shifts, and we'll be back with the latest to keep you ahead in the market game.